Welcome, curious minds, to another deep dive. Every day there's just a whirlwind of news around Bitcoin, isn't there?
Oh, absolutely. It never stops.
So today we're cutting through that daily noise. We want to bring you the essential insights from the latest market analysis. And it seems like there are two very different stories playing out at the same time.
That's a great way to put it, yeah.
On one hand, you've got the market almost holding its breath, like frozen, waiting for some big announcement. But then, underneath that, there's this powerful, accelerating wave of fundamental progress happening. Really interesting stuff in the ecosystem itself.
That's precisely it. Right now, Bitcoin's immediate price action, it's consolidating, pretty much stalled just under a key resistance level.
Right.
And this market-wide pause, it's mostly driven by anticipation. Everyone's waiting for the pivotal U.S. Federal Reserve interest rate decision that's coming right up.
Right, the FOMC.
Exactly. And what's crucial to understand, I think, is that this period of reduced volatility, it's largely a macroeconomic hold, but it's actually masking some pretty significant and accelerating foundational growth within Bitcoin, real underlying strength.
Okay, so let's unpack this fascinating duality then.
Yeah.
Our mission today is to give you a clear understanding of both things, the short-term market standoff and the longer-term structural strengthening.
Makes sense.
We'll try to explore everything from the immediate price movements, the macro influences, right through to major institutional plays, shifts in regulation, even some critical tech advancements.
Yeah, covering the whole picture.
Hopefully you'll walk away with a clear idea of what's truly moving the needle for Bitcoin right now, separating the temporary noise from the enduring signal.
Let's do it.
So let's zoom in first on where Bitcoin is actually trading. As of, September 15th, 2025, it's fluctuating in a pretty narrow band, kind of hovering around that $115,000 mark. We've seen continued consolidation over the last day or so, even with some, minor dips.
Yeah, and this cautious positioning by traders, well, it's almost entirely a direct result of waiting for that FOMC meeting we mentioned.
Okay, so it's all about the Fed right now for the price.
Mostly. But it's also influenced, maybe to a lesser degree, by a slightly stronger U.S. dollar. That can sometimes make dollar-denominated assets like Bitcoin, well, a bit less attractive.
Oh, right.
And you also just have the typical thinner liquidity we often see during weekend and early week trading. Less volume, less conviction sometimes.
It's easy to get caught up in the day-to-day wiggles, but what's really compelling about this price action, like you said, is that it's a consolidation phase after a recent rally.
Exactly. That's key context.
That rally actually broke Bitcoin out of a multi-week downward channel. So the market isn't just, treading water aimlessly. It's kind of digesting those gains, trying to figure out its next big move.
Deciding where to go next.
So technically speaking, what are the key levels you're watching? The battlegrounds.
Okay, yeah. For anyone looking at the charts, strong support seems to be holding firm around that $114,000 level. It's psychologically important, but technically significant too.
Why is that 114K level so important?
Well, it aligns pretty well with the widely watched 50-day simple moving average, and that's an area that often attracts buyers historically.
Got it. And on the upside? Resistance.
Immediate resistance is just a bit below $117,000, but there's likely a more substantial supply zone, where sellers might step in more forcefully anticipated between $118,000 and $120,000.
Okay. So for you, if you're looking for signals, a daily close below $114,000, that would be, a short-term bearish flag?
Yeah, potentially. It could open the door to retest some lower levels, but on the flip side, a sustained break above $120,000, that would likely signal a continuation of that recent uptrend we saw.
And the biggest factor influencing which way it tips seems to be back to the Federal Reserve.
Absolutely, without a doubt. The primary driver of this current price stasis, this holding pattern, is the intense focus on the upcoming U.S. Federal Open Market Committee, the FOMC meeting. That's scheduled for September 16th and 17th.
Right. And market consensus, if you look at things like the CME FedWatch tool, it suggests, it's almost a certainty, right?
Yeah.
A 25 basis point interest rate cut.
Yeah, the odds are very high for that quarter-point cut.
There's even a small chance, technically non-zero anyway, of a bigger 50 basis point cut, though I guess that's less likely.
It is less likely, but yeah, the market's really expecting that 25-point cut. In fact, this expectation of monetary easing, it's actually what helped fuel Bitcoin's recent bullish momentum in the first place.
So it's already baked in to some extent.
Largely, yes. The market has mostly priced in the 25 basis point cut itself. So the actual rate decision, it isn't as critical maybe as the forward guidance.
Okay, explain that. Forward guidance.
It's what the Federal Reserve signals about the future path of interest rates in their policy statement, and, very importantly, what Chair Jerome Powell says in his commentary afterwards.
So his tone, the hints about what comes next.
Exactly. The key insight for investors, for you listening, is to listen past the headline rate cut number. Pay attention to Powell's tone, the nuances. That will likely dictate the market reaction.
So if that forward guidance is more critical, what kind of subtle things should listeners be listening for? How might different interpretations play out?
Okay, so a dovish message, meaning, a stance that supports continued easing, keeping financial conditions loose that could be the catalyst. Bitcoin needs to break through that resistance we talked about, maybe push above 120K.
And the opposite, a hawkish surprise.
Right, any kind of hawkish surprise. Maybe hinting that future rate cuts might be pushed further out into 2026 or even stopped altogether. That could trigger a broad sell-off, not just Bitcoin, but across risk assets generally.
Right.
And that could potentially drive the Bitcoin price down toward those support levels, around $110,000, maybe even lower.
And this whole situation is amplified because the global economic picture kind of supports easing, right? We saw weaker German data, mixed stuff from China.
That's right. Those recent figures, like the weaker-than-expected German wholesale price index and the sort of murky industrial production data from China, they all contribute to this narrative of slowing global economic activity, which generally strengthens the case for central banks, like the Fed, to ease policy.
Okay, so the Fed clearly dominates the short-term headlines.
Yeah.
But let's shift gears. There's another powerful force building momentum behind the scenes: institutional adoption.
Yes, and this isn't just continuing, it feels like it's diversifying, which is maybe even more important. It creates a more resilient base of demand for Bitcoin.
So what's new on that front?
Well, what's really fascinating here is seeing the continuation and maybe the refinement of that corporate treasury strategy, companies putting Bitcoin on their balance sheet.
Like MicroStrategy famously did.
Exactly. So Capital B, that's a French publicly traded company on the Euronext Growth Paris exchange, they just confirmed they acquired an additional 48 Bitcoin for about 4.7 million euros.
Wow. And the purchase was funded through recent capital raises with institutional partners. That seems significant, too. It's like traditional capital markets fueling a digital asset strategy.
It absolutely is. It underscores that synergy. And this latest buy brings Capital B's total holdings to over 2,200 Bitcoin. Their total acquisition value is around $206 million now.
And they're explicitly calling this their strategy.
Yes, it's a direct execution of their stated Bitcoin treasury company strategy. Their goal is to increase their holdings of Bitcoin per share over time, and this positions them, interestingly, as Europe's first public company with such a dedicated focus. It's a real statement.
And speaking of corporate treasury strategies,
right.
Formerly MicroStrategy, they're still at it, aggressively accumulating. They practically wrote the playbook here.
They really did. And they're not slowing down. According to a recent filing, Strategy acquired another 525 Bitcoin. That was for roughly $60.2 million just between September 8th and 14th. Average price just under $115,000 per coin.
Okay, hold on. That brings Strategy's total holdings to what's the number now? It's huge.
It's staggering. 638,985 Bitcoin.
Wow. That's more than 3% of Bitcoin's entire eventual supply.
It is an incredible amount for one company. Their total investment is around $47.2 billion. And here's the kicker. Based on current prices, they're sitting on an unrealized gain of approximately $26 billion.
$26 billion. That's just a massive validation of their long-term conviction, isn't it?
Absolutely.
A very powerful one.
Okay, now let's talk about something that feels really impactful for the convergence of TradFi and digital finance. We just heard about a collaboration between Binance, the huge global crypto exchange, and Franklin Templeton, a legacy finance giant managing over $1.6 trillion in assets.
This is genuinely a landmark development, I think.
Why so significant? Well, when a highly regulated, very conservative institution like Franklin Templeton publicly partners with a crypto-native behemoth like Binance, it just provides this powerful stamp of legitimacy for the entire asset class. It's a huge signal.
So it tells the market that this is serious.
Exactly. It signals that major financial players are moving beyond just watching. They're actively building infrastructure now. Infrastructure for compliant tokenization, for stablecoin-based payments. They're getting their hands dirty.
And what does that do for other institutions? Does it make them feel safer?
It absolutely de-risks the digital asset space for other conservative institutions. Think about it. If Franklin Templeton is doing this,
then maybe we should be too.
Precisely. It likely compels other asset managers, banks, pension funds. They'll probably feel pressure to accelerate their own digital asset strategies just to remain competitive. It's not just a one-off partnership. It's more like a beacon showing the way for broader adoption.
Interesting. And this bullish sentiment, it isn't just confined to direct Bitcoin holdings or these big partnerships, right? The Bitcoin mining sector is also seeing a surge.
Yeah, definitely. Investor interest there is heating up. The CoinShares Valkyrie Bitcoin Miners ETF, that's ticker WGMI, it just hit a new 52-week high.
Really? By how much?
It soared up 236% from its 52-week low. Huge rally.
What's driving that? Just the Bitcoin price?
That's a big part of it, naturally. But it's also boosted by that increasing institutional adoption story we just discussed, and maybe a perception of a more favorable regulatory outlook. Things like former President Trump's proposal for a U.S. crypto reserve get factored in.
Right. And that ETF, it gives investors concentrated exposure to miners. Like, who are the big holdings?
Top holdings include names like Iron Limited and Cipher Mining, CIFR.
And it seems like the miners often outperform Bitcoin itself when the price goes up.
They do. That consistent outperformance, especially in bull markets, really solidifies the sector's role as a high beta equity proxy, meaning it tends to move more dramatically than Bitcoin, offering amplified exposure both up and down, of course, for investors.
Okay, so we've got the macro wait and see, the institutional build-out, the miner surge. What about regulation? That's always a huge piece of the puzzle.
It is, and we're seeing some important progress there too, specifically in the U.S. The IRS is implementing new tax reporting requirements.
The tax man cometh for crypto. Is this good or bad news?
Well, it's a significant step towards solidifying the market's compliance framework, which ultimately is probably good for long-term adoption and institutional comfort.
So what's changing specifically?
Starting January 1st, 2025, digital asset brokers think major exchanges like Coinbase, Kraken, etc., they'll be required to report transaction information, both to the IRS and to their users, and they'll use a new form, Form 1099-DA.
Okay, so for the 2025 tax year, the forms we'll get in early 2026. Brokers will have to report the gross proceeds from all sales and exchanges of digital assets.
That's the first step, yes. Gross proceeds reporting starts for the 2025 tax year.
And then,
beginning with the 2026 tax year, the reporting requirements expand. They'll also have to include the cost basis of the assets sold.
Cost basis. That's huge.
Yeah.
That makes calculating capital gains or losses much easier, right? That's been a real headache for people.
Exactly. It simplifies the process massively for investors. It's been a long-standing point of friction and confusion, so this move effectively standardizes cryptocurrency tax reporting. It aligns it much more closely with how traditional financial assets like stocks and bonds are treated.
So it's really a key milestone in the maturation of digital assets within the U.S. financial system, bringing crypto tax reporting into the mainstream, basically.
That's a perfect way to summarize it. Yes.
Okay. So while all this market action and regulatory change is happening, often grabbing the headlines, Bitcoin's underlying technology, the base layer and things built on it, that continues to quietly evolve and strengthen too, doesn't it?
It absolutely does. And often these developments are just as, if not more, important for the long-term picture, even if they don't move the price immediately.
What's a good example of that happening right now?
One of the most compelling examples, I think, is the Lightning Network. That's Bitcoin's Layer 2 scaling solution, designed for faster, cheaper payments.
Right. We hear a lot about Lightning's potential. Is it seeing real use?
Very much so. Chipper Cash, they're a prominent African fintech platform, huge user base, over 7 million customers. They just announced that over 50%, half of all their Bitcoin transactions are now processed via Lightning.
Wow, 50%. That's not just experimental anymore. That's huge.
It really is. It's powerful evidence of the Lightning Network's viability as a genuine, scalable payment rail for everyday use, not just theory.
And especially relevant in emerging markets, maybe, where traditional banking can be slow or expensive.
Exactly. That's a key use case. This integration, which is powered by an infrastructure provider called Voltage, it enables near-instant, really low-cost settlement for potentially millions of users. It's real-world adoption on a massive, tangible scale. It makes you wonder, doesn't it? Could this kind of widespread use in emerging markets actually shift how Bitcoin is perceived globally? Maybe push it beyond just being seen as digital gold?
That's a great point. It adds that utility layer very visibly.
It does. And the Lightning Network itself is still advancing technologically. A new version of one of the main node implementations, Eclair v0.13.0, was just released.
Yeah.
So, continuous improvement.
What's significant in that new Eclair update? Anything major?
Well, a key feature is the initial, still experimental implementation of something called taproot channels.
Okay, Taproot was that big Bitcoin upgrade a while back, focusing on privacy and efficiency, right?
That's the one. Bringing its benefits into the Lightning Network is a big deal. Now, this implementation in Eclair is experimental, not quite ready for general use yet.
But it's a first step?
It's a critical first step. It moves towards integrating those privacy and efficiency benefits of Taproot directly into Lightning. And the long-term goal. In the future, Taproot channels should make opening and closing Lightning channels look pretty much indistinguishable from regular Bitcoin transactions on the main blockchain.
So much better privacy.
Significantly better user privacy, yes.
Right.
And it makes the network even more efficient and robust overall. It's foundational work.
Okay, but it's not all smooth sailing and the layers built on top of Bitcoin, is it? We also had a bit of a cautionary tale recently.
Yes. You're probably referring to Yala's Bitcoin-backed stablecoin, YU.
Right. It depegged, lost its intended value. What happened there?
Yeah, it depegged following a security breach. Basically, someone found a vulnerability and managed to mint new YU tokens without authorization, diluting the value.
So what's the lesson there? Does it mean Bitcoin itself is vulnerable?
No, absolutely not. And this is crucial. This event serves as a critical reminder of the security challenges inherent in the broader digital asset ecosystem, particularly for protocols built on top of a base layer like Bitcoin.
So the problem wasn't Bitcoin?
Unequivocally not. This was not a failure of the Bitcoin protocol itself. Bitcoin's base layer remains incredibly robust and secure. What it highlights is the crucial distinction between that base layer security and the potential vulnerabilities of more complex application layer protocols built on top.
Okay.
It just underscores the absolute necessity for rigorous, ongoing security audits, really strong risk management, maybe even decentralized governance structures for any project building on Bitcoin.
Yeah.
It's a vital, if painful, lesson for the whole ecosystem as it builds out.
Right. Base layer security is one thing, application security is another challenge entirely.
Exactly.
Okay, so wrapping this all up, what does this mean for you, the informed listener, trying to make sense of it all? It really feels like Bitcoin is at a fascinating juncture.
It really is. You've got this short-term macro-induced stasis, the price action almost entirely beholden to what the Federal Reserve signals next.
Contrasted sharply with this long-term fundamental acceleration that just seems to keep rolling on underneath.
Precisely. The FOMC meeting, no doubt, will serve as the immediate catalyst for price volatility. Up or down, we'll likely see a move.
But focusing just on that would be missing the bigger picture.
I think so, yes. To focus solely on that immediate catalyst would be to miss the more profound, more impactful developments we've been discussing. It's easy to get caught up in the daily price swings, but when you look at these foundational shifts, the institutional adoption, the regulatory clarity, the tech maturing, it really reminds you of the long game being played here.
Yeah, exactly. Those true long-term value drivers, they've all seen material advancement recently. Institutional adoption isn't just capital inflow. It's a maturing perception of the asset itself. The regulatory fog, at least in the U.S., is starting to clear, providing much-needed clarity.
Which institutions crave?
Right. And the technological bedrock of the network itself, like Lightning and Taproot integration, is being consistently hardened and improved, paving the way for greater utility.
So looking forward, beyond just the immediate Fed decision, what should you keep an eye on? I'd say monitor continued corporate treasury allocations. Who else follows strategy in capital B? Watch how the market adapts to the new tax reporting frameworks. And keep track of the ongoing rollout of Taproot-enabled features on Lightning.
Because these developments, taken together,
they strongly suggest that Bitcoin is significantly maturing. It's moving into becoming a more institutional-grade asset, really moving beyond its early, more speculative days.
Which raises a really important final question for you to consider. If these foundational pillars of Bitcoin, the institutions, the regulation, the tech, are strengthening so rapidly and in such diverse ways, how much longer can this short-term macroeconomic uncertainty truly suppress its longer-term trajectory?
That's the multi-billion-dollar question, isn't it?
Something to think about. Thanks for joining us for this deep dive. We hope you feel a little more informed and maybe a lot more curious.